All right, welcome back everyone to another market recap. Today we have 3 trades, one from Justin, one from Dodgy, and one from Hydra. As well, I'm going to be talking about what happened, why I was right about the draw on liquidity, why I was right about the daily profile, and why I was right about where the market was going to go, all except for one thing, and why I didn't end up taking any trades, but I feel like every single day I am getting better. So let's take a look at the day. Let's take a look at the chart and what happens. So from the beginning of the day, I marked out Asia session from 20 until midnight. Now, one of the first things I said is, wow, Asia looks like an accumulation range, right? It's really hard to look at this and not say this looks like an accumulation range, right? Then from 2 until 5, we start to move away from this range. And I'm like, okay, this seems like this could be a New York reversal day because that's just such a clear accumulation range. I would think that would be targeted. That seems like that would be a draw. So I had this noted out that like Asia just looks like such a clear target, right? Asia's highs. I also had London's highs as well. And then I also noted that we had equal highs here, and relatively equal highs here. So a lot of draws to the upside. So everything seemed like it was bullish, but I needed to get an entry. And that's the part that I was still needing to iron out and make sure that I could actually get a good entry. And so from the beginning of the day, I was saying, hey, I kind of expect like a manipulation move down like yesterday because yesterday we had a range here that built and then we had a final move down. I feel like that's something that could happen again today, especially because London lows were also equal lows with this low over here. So I was expecting a move down. And we get this manipulation move down. Now, at the time, I was somewhat anticipating us to go to previous day's low here, and we actually didn't need to go to previous day's low because we already took out a key level. We already took out London's low, and that was enough. That was sufficient of enough of a key level for us to actually stop at London's low and reverse after that. So we didn't need to go to previous day's low. Even though that seemed like a good draw on liquidity, that wasn't. The market didn't need to go there. So anyway, London's low and the equal lows are where the market drew to. Then, if I go down into the lower time frame here, we got a 1-minute SMT, and I noted that you could take that there was like this inverse here, but I just didn't think this was super high probability as order flow is still bearish going towards that previous day's low. So it's not something that I really felt like made sense and within the context of the model yet. So I didn't take this. But you can see if you took this, then you could have gotten maybe like a nice 2-to-1 or something like that. And if you targeted further up, then you get more. But once again, I wasn't that interested in that kind of trade. We then got a 1-minute market structure shift, at which point this is the entry that I saw. This is like I saw this after the trade happened, but this is something that you could have taken. This is like a TJR type trade. So like where you get a sweep of a low, so a sweep of London's lows, 1-minute market structure shift, and then notice how there's no fair value gaps in here. There's no TJR fair value gap. There's no fair value gaps for your TJR style entry, but what there is a 1-minute order block, and this actually works for your classic TJR type trade as well. So we had, instead of a fair value gap, we pushed into a order block. So we have this 1-minute order block, and this SMT pretty much somewhat protects these lows, right? So the SMT kind of says, hey, these lows should be protected. We then get a reaction off this 1 minute order block. And if you entered on this 1 minute order block, I would simply target these equal highs because that seems like the low hanging fruit, right? This is if I was taking this TGR trade. Now I'm not going to be taking. I decided that I'm not going to be taking these other types of entries until at least November, just to gain some more experience with them. Right now I'm only sticking to inverse for value gaps, but I think around November is when I'll start to feel comfortable possibly taking other kinds of entries. So, or maybe I'll wait till December, some middle of November. I don't know, 3 weeks to a month to a month and a half to 2 months. I don't know. So I'm just gaining some more experience with them. But anyway, you can see we swept out London's lows, market structure shift, test of this order block, right to the equal highs, and then also Asia's highs. So this was a nice trade, 5-1 as well. It was a 3-1. Then this was essentially the trade that Justin took. So if I pull up Justin's trade, you can see things to make a grown man cry. So it looks like I still don't know how he enters, to be honest, because I thought he enters on the retest of the CISD, but it looks like he entered when the CISD got created. So apparently there was also an SMT here that I missed. There's some other kind of SMT. Anyway, he might have entered on the CISD getting created. I'm still figuring out if people actually do that or if that's just my speculation, but he for sure entered by the time the CISD got retested, right? So he entered on this retest of the CISD, or he entered before the CISD. I don't know, but something like that. And then, or maybe he entered on that inverse for value gap, right? I really don't know. And then I'm guessing that he got stopped out at break even, and he was targeting these highs and these highs. So that's why he said things to make your grown man cry. But if anyone knows what Justin's entry was here, definitely let me know. I'm not sure if it was like the retest here of the CISD, if it was the creation of CISD, or if it was that inverse for value gap, or if it was something else. So definitely let me know. But that's the part I don't get about Justin's trade. Anyway, yeah, CSD, 1 minute CSD got created here. That's what it seems like. And yeah, then we go higher. So, okay, on to the next trade. So, from here, like I was saying, yeah, we retested this order block, and then we went up to equal highs and Asia's highs. Now, I was saying we could have also went and tested previous day's high and previous month's high, which were up here, but the market has not shown continuation up there yet. So, but just know that there's previous day high right here and previous month's high up here, and then previous day's low down here. So anyway, around this time, the market hits previous Asia's high, and it starts to slow down. So let's look at someone else's trade. We got this one from Dodgy. This was the other type of trade you could have taken on the way up here, and this was very similar trade to this sweep market structure shift order block trade, except instead of entering on this order block, you're entering on this 3-minute inversion. Now I feel like this was a very advanced trade. It's very impressive of Dodgy to take this, because I didn't take this because, one, I didn't see the 3-minute inverse. Two, this wick took out this high. It's not like I don't love it, and because it took out this high here. And three, to be able to take this trade, I guess this is kind of like something that is advanced that he did after, but to be able to take this trade, he essentially just said my stop loss is going to be a manual stop loss. So I'm only going to stop myself out if there is a candle body close back down below the stop loss. If it's a wick, then I'm staying in the trade. And so this is something that's a very advanced thing that he did. But anyway, he says, I call this thanks for the liquidity wick Megatron 3000 Toodles. So he is just a baller here. He doesn't even freak out with this wick. He only exits his trade once the close back down below. Is this what I'm assuming? So that's crazy. I'm not sure if all of his trades are like that or not, but very, very interesting. So at which point we go straight to these equal highs, and this would be the clear draw on liquidity. So yeah, this was a very advanced trade. This is why I didn't take this. And yeah, this wick kind of made it unfavorable for me, in my opinion. But it's something you could have taken. It's something if I saw it in the moment, maybe I would have taken it, but I don't. This wick makes me hesitant, and then also you would have to know this advanced concept for this to even be a profitable trade. So crazy. And then we came down, and the last trade is from Hydra. We came down and we retested this this for value gap here. Something else I'll note is we barely tapped back into discount, which is a huge indication that the market was still bullish. You see that we, from the low to the high, we went into discount, which showed that there were buyers right when the market went into discount, so the market's still showing bullishness, right? And then we got this 1 minute inversion, which is one that Dodgy took as well. I'm not going to pull it up, but Dodgy did take this. He scaled 75% at this high and then left runners, but he got stopped out of break even. And so anyway, 75% here. So this was a good trade that Dodgy caught. Now I saw this one, I noted it, but I was honest. It was 7 minutes till I was getting off the charts, and I was getting kind of tired, and I just didn't love this external gap here. So this is why I didn't take this one. But with conviction, you definitely could have taken this trade. And then, but yeah, I guess I was just really picky. I'm sick of losing right now. I want to take only really, really good trades. And then the trade that Hydra took was so this is like a breaker because it's a high, a low, or no, a low, a high, a lower low, a higher high. So this green candle is a breaker. This high, low, high, lower low, higher high, and then it overlaps with this for value gap. So who's showing this is like a unicorn setup. He scaled some at this high, and then I'm guessing that the trade wasn't invalidated, so he held this trade still. At which point we got this inversion right here. This was an inversion that happened later on. So yeah, this is a 1 minute inversion that happened right here. So I guess he scaled more on after this 1 minute inverse right here. And then took more off right here. So very nice trade, very advanced of him to know that he should take profit here and not here, but it makes a lot of sense because these are equal highs. See that? See how these are equal highs, and see how these like aren't exactly equal. So if when you have a clear draw like this where there's equal highs, just scale most off at those equal highs. Just take so much off. Just take all off at those equal highs. You don't go for the low hanging fruit. Don't go for more because there's perfectly equal highs here. You don't need to go for more. So that's the lesson with this trade from Hydra. Just if there's perfectly equal highs here, all you need to target is this, and that's what Hydra did. So very, very cool trade, very good trade of that he did. So now this probably would be a break even trade for me because I'd probably move my stop loss to break even. I probably would not hold because of conviction because there's equal lows here. So I would probably get stopped at break even. But it wouldn't be a loser for me, which is good. And then, yeah, anyway, it did go hit his target, which is cool, but there are equal lows, so not my favorite thing in the world. And then, I think that about covers it, but that looks like the other trade that he took. Yeah. I would say the only other thing is that, yeah, I didn't mark out this breaker block here, but you can see that this is a let's see if we can find the breaker here. What chart was this on? The 5-minute? So this was a low, a high, a lower low, a higher high. So this is a breaker. And overlap with this for value gap. And that was his confluence for his trade to the upside. So I think that about covers all the trades today. But yeah, clear New York reversal day from the very beginning. It seemed like once we had this tight range in Asia and then continued lower during London, not really hitting any key level, it seemed like Asia was going to get ran again, and that's exactly what happened. We got an SMT and market structure shift, and if I was to do this day over again, honestly, I feel like I'm not exactly sure even what I would do differently other than I could have entered on this 3-minute inversion, but I would have had to know that advanced concept anyways. So, not upset with how I played today at all. But the only thing I would do differently is I would have entered at this order block if once I'm comfortable with these kind of entries, this is an order block entry that I would definitely have taken. It's more advanced, and it's gonna probably take another month before I gain conviction with these ones. But that's the only thing that I would say that if I were to come into this market again with this new frame of mind, I'd be looking for this market structure shift order block entry. So as well, this SMT protects the daily low. But yeah, I'm not taking this for at least another month to gain a little bit more conviction. But yeah. Seems like that about covers it. So if you guys enjoyed this video, thank you guys so much for watching this video. I will see you guys in the next one. Bye.